This conference will now be recorded.
Good morning, all. This is 9 a.m. I'm sorry, this is Fatty Hemsey. It's 9 a.m. Wednesday, April the 7th, 2021. Quick morning housekeeping items very quickly. Hi, Nancy. How are you? I've missed a few briefings, and I apologize. I just had a tough schedule. And of course, my psoriasis stuff hasn't been helping either, but slowly getting back on the horse. And I think I know what I need to do. It would be a little bit more stringent diet and so on and so forth. A few things not to do, and lots of sleep and lots of water. So hopefully I'm turning corner here. Bear with me, please. I miss being here, but just hasn't been easy. So, all right, moving forward, let's just move on. We'll try to get back to my normal schedule I was on, and then keep up with you guys and so forth. I understand there's an issue with Opera. I have to check with Nader. All I know is that we've also hired another fellow to help us, not on that area, but also on the Teams. As you know, Teams will be replacing Skype by August 1st. So this is the person he has worked with and knows the discipline, especially the tools that we use. That's crucial. That we don't start from scratch or try to teach somebody how to use it. We've been looking for someone for a while, at least a year. Just haven't been able to run into the right person. But hopefully this person is. So we can do the development a little bit faster. Keeping Nader on the existing issues and letting this gentleman go into Teams and do the new work so that we merge them together quickly. All right. Cross your finger, we'll get there. Just like other challenges we've had over the last few years, we've always come victorious, but it hasn't been easy, but we have done it. And one of the things that you know about me is that we don't give up. We shall never ever give up. So moving forward. First thing we do here, as you know, is econ calendar. So let's go there quick. There we go. All right. Today is the 7th. So we're going to have trades coming up. Charlie, Mr. Dove from Chicago will be speaking. Charlie Evans. Capital is speaking from, I think that's Dallas. I'm right. I got to update this list. Okay. Yeah, here's Dallas and Daily San Francisco. Am I right? Hey, the brain is still working. Well, that's good news. And we're gonna have minutes this afternoon at 2 p.m. Minute. It's not a FOMC meeting. It's the minutes of last meeting. Okay. 8:30. I had this report. We're at 9:02. This should be out by now. Yeah, close enough. Getting a little bit worse. I understand that, but it's in line. All right, good. Okay. Tomorrow, we have jobless claims. Most important. Powell speaks again. Wasn't there talk yesterday that Powell was speaking? I didn't see him. Was it yesterday? No. So he's speaking on Thursday. Gotcha. Okay. Bullard speaking. That's San Luis. Another Mr. Dove. And Kashkari. Is that Minneapolis now? Yeah. Okay. Okay. And then Kaplan again. PPI. Okay. So what I want to know is really what the jobless claims expectation is. This should be a big drop because of the last non-farm. Last Friday's non-farm. Come on. Come on, Jack. Let's go. Okay, it's not responding. Why? There we go. Try again. Okay. Oh, okay. Okay. Yeah. So it's drifting down. Yeah. This needs to drop down dramatically. I doubt that will happen that fast. Why? Hires and rehires, job changes, lateral movements. So, in a sense that you have some period in between that you don't have what you want. So, in terms of moving around. Okay. Oh, we don't go there yet. Oh, sorry, we don't go here. No, not yet. So, having said that, I would still pay attention to this jobless claim. I missed the non-farm, but that non-farm should be good. That was a good number. Hi, Simon. How are you? Hi, Nancy. Hi, Michael. Welcome, guys. Hey, Johnny, how are you? So that's Econ Canada. Guys, those who missed the opening, please go back later on, listen to the recording. Okay, thank you. All right, let's go through timing charts. Okay, boo-boo time, right? I was okay until here, and the last 2 days have blown me out of the water. So go back to the drawing board, see what's going on. I got fooled. The data is too strong, so I'll have to regroup myself a day or so, figure out what we're going to do. But occasionally I've been wrong. Last March I was also wrong. No, last February I was wrong for 3 days. But I held and you saw what happened. I don't have the same conviction. No, let's not compare the two. But I was expecting a pullback. It hasn't happened. So my bad. Remember, being in timer business, you don't measure yourself on one trade or one month. It's a long period over many trades. So the last 10 years, probably had 250 trades. So before I was named timer of the decade. So it takes you got to measure yourself over a long period of time. You're gonna make some mistakes. But this was now. Did I give you guys a trade? Just give you a bias. I gotta get it back on that regime. I apologize for that. I've just had too much going on since I moved. There's been so much happening here, and a couple of it has been personal. I've been hit, but I'm trying to regroup myself. So bear with me, please. CI rising. CI dips have been very positive, and we're getting to a near overbought condition. I still like to see 150. We're not there yet. So this is a very tough spot to be in. I'm short. Market's going against me, and yet market's getting to nearby short-term overbought. So this is the last place you want to get long. So either my choice would be either go flat to stop the bleeding, or sit a little bit longer, but then you may take more heat. Those are the options I have at this juncture. Okay. 111 is the beginning of overbought. That's a little bit more to go. I would consider 150 as overbought. We're not there yet. Obviously, we pull back a little bit. Nasdaq has been a little bit softer all this season, last 2-3 months. In each step of the way. As a matter of fact, as you see, Nasdaq has not made a new high yet. There's nothing here you don't know. I'm just going over it with you. Again, remember, I'm trying to get back on the saddle here. Forget canaries. Let's go here. There we go. DT. Okay. Transportation in line with what we're seeing in the SPX. As a matter of fact, caught up there. Russell has not caught up yet. It will, but where Russell goes is what NDX should do. Maybe today we'll find out a little bit more. Right now we're down 32 on futures on the NDX future, NQ or slash NDX futures. That's down negative 32. And I will take a look here quickly what the ES has done. No. Huh? No. Sorry. Wrong screen. 1 second. No. Come on. There we go. Okay. And S&Ps are down negative 4. Yeah. I was just trying to look at overnight. DTs, the D trenders. Let's see. Looks like they're all positive. Interesting. They just went positive because of Russell. You see that area. So we're D trender. Just for those of you who don't know, is the difference between price and moving average. Either it's 50, which is this one, or 200, which is this one. Okay, so we just went positive, so we're right above it there. So 8 out of 8 are positive. Usually this pulls it up. We'll see. So I have to make a decision there. SB1 Momo, we switch back to buy. So buy and buy. The system did this is all purely mechanical. We're not getting very high readings yet, so we're not peaking here either. The high readings and the 52 weeks high and lows. I'm saying 52-week highs for S&P. Especially if you look at the weekly, you can see the pattern, but nothing there yet. So it's quiet. Momo, as I'm saying, SP1 is at the 2 sigma. You see it there, right there, that line. And Momo is almost 3. Neutral, kind of neutral. Yeah, positive, neutral. Nothing to be alarmed about. And so the faster, smaller brethren of SP1 not giving us any divergence here yet. With a minor reading here, if you think about it here, minor reading there. And that's not unusual. You got that high, this high, and this high. Look what we did, 3 lower highs. Nothing unusual. But does it turn into a signal? Time will tell. Usually, if it continues, it will. But remember, we're talking about this trade. It's very tough to talk this trade. We can talk about generalities, we can talk about statistics, we can talk about X number of trades back and now, but not the next trade becomes always difficult. It reminds me of the guy last year in late March was asking me, or mid-March, was asking me, well, where's the bottom? And I said, okay, well, this level, that level, that level. This is when we're beginning to really drop fast. And if you remember that webinar, and he said, oh, I don't need the levels, I need to know the time too. I said, what? Excuse me. I'm a price cycle guy. I'm not a time cycle guy. No, I need to know what this is. I said, listen, hold on. Before I hit the eject button, remember Aston Martin that 007 drove? Yeah. So before I hit the eject button, hold on. You're asking me to do something that I don't usually do, which is a price cycle, time cycle. Plus, you want me to be correct about this trade. What we talk about is always statistical. It's not all of it. Next trade. It's very difficult to say that. We don't know. Once the trade is done, then we know what happened. So that part becomes difficult. And the other issue becomes liquidity. Can you sit in a trade going against you that long? So that's why we have a stop. So I gotta go back, take a look at that, and then catch up. But I think this trade I've lost. So, statistically speaking, Vols. Vols have not come down. Hello. Yeah. Nothing has changed in this ball game. We're still having a very high reading in Vols, given where we're on the new asset, I'm saying new highs. And this is, to me, just the coronavirus premium. It's just the nervousness out there. And of course, markets, as I learned from Steve Shulman, great Steve Shulman, market will rally, will walk up the wall of worry. This is the wall of worry we're in, and it's look at this. Look at we got up like this, and very little change. Today, what's today? Is it? No, that's next week. Next week we're gonna be switching, I guess, to M contract on the June contract on CL. All right. SQ. This I came back and look at last night before last. I looked at. I had to see what SQ was. As you know, this is a terrorist. It's beginning to back up again. Makes sense. And this signal was definitely wrong. We had a high reading, +3 sigma, and no results. So that was off. Again, not all indicators are going to work all the time. It just doesn't. It's just nature of this beast. This is not running a Mattel widget line where within X number of products you can tell what the quality you have. There are going to be some misfires. This is a misfire there. So we went up there. This should say, we're going to drop off. Now, keep in mind, all things being equal, there's a delay here. When we get these signals like there and like there, is a 2 week, I'm saying 4 weeks to 8 weeks forward on SQ. So jury still is out. It's hard to judge it right now. So erase the concept of misfire. Let's say we did have a fire at 3 sigma alert at 3 sigma of SQ. Where are we gonna be 8 weeks from now? 4 to 8 weeks from now, we don't know. Sometimes it's been 10 weeks. So remember the August 2018 signal. So it's tough to say right now. We don't know where we're going to be. what the news is going to be, what the data is going to be. All I know is that earnings season is coming. Yeah, within a week will be the earnings season. So we shall see. We shall see. But keep that in mind. 3 sigma, and what's the level? 148, near design limit. Remember, design limit is 150 to 100. So this is an anomaly. One time we had it. And that was the one I'm talking about. This came August of this height came in August of 2018, and we didn't get into a bloodbath until about maybe a week before Thanksgiving of 2018. So it took full 2 months before really showed his hand. So again, tail risk, SPX put options by very, very big guys. Talking about trend. I'm not so crazy about trend. All right, here we go. The spread here is 3.89. So this is the spread of the the current months of VIX and the 3 months forward. So we're using we must be using May. Oh no, I'm saying April and July. Yeah, we're using April and July. Makes sense. 4th and 7th. Yeah, of month. Okay, that's about right. Okay. Now, where's 3.89 tells us? When we get close to 0, that's the low. We're nowhere close to that. So we're actually, if anything, we're near the highs. Makes sense also. Somewhere here near the highs, we're hanging out. 40.60, obviously, this was the high of up there. 40.70, so okay, 10 handles lower. So neutral here, no meaning. We are setting up a rendezvous point with the stock RSI of all 3 parameters, all 3 curves there, moving forward up to here. Maybe that would be a high. We don't know. We just have to anticipate that. And then we have pulled back to 82. Yesterday, I talked about this in the chat room, being that it's a 82.6. That's over 75 is overbought. We're up there. I think yesterday we were what 88, 85, 85.08. Yeah, fairly high up there. So we're extremely overbought here. Be careful. If you have positions that you have on, I would examine them, see what your thesis is, see if you can justify holding in them. Take some profit. Try to be trading with house money. That is, at least take a good portion, if not all of your entry funds out. Okay. Hi, Scott. How are you? If you missed the beginning of this presentation, please make sure that you listen to it later on when you get a chance. Okay, I made some announcements there. I'm sorry I've been so behind. I'm trying to come back. My psoriasis is doing a lot better, but I've been under a lot of pressure. Physically, yeah. Nobody knows what's wrong with me other than I'm just having sleep issues and so forth. But I'm trying to make modifications to slowly my behavior so that I can survive this attack. This has been a tough psoriasis attack I've had. Started since I moved. Yeah. Anyhow, treasuries. Fairly neutral here on the front end of the curve. This is a IRX, so it's a 91 discount rate. It's not the rate. It's not the YTM. It's not yield to maturity. It's discount rate. But the Fed is playing with that. These 3, they're just buying some long term. They've been trying to target it. They haven't had a good record in there. We're way above what most people were looking for during the pandemic, which was 1.0 on the 10-year. We're at 1.6. Remember, we got to divide these by 10. We're at 1.6. To me, that says we're getting healthier. The economy is getting back on track. There's some demand coming in. Therefore, the rate should be slightly higher. Very flat here on 30. Remember, long-term assets like insurance and properties and so forth. I mean, commercial properties huge. Mortgages, mom and pop mortgages, 10-year, and cars. If you were thinking this, automobiles. That's where we are. 0.867. If we get past, let's say mid-August to early September area, I expect all of these to be much higher. Much higher. Yeah, that's my expectation. Assuming we don't have another variant coming in that we can't do nothing about. That's the scale. Just for the record, I'm going to have my second shot on Friday. We do have a lot of variants here in Florida. Scary. And with psoriasis, that's really, really scary in terms of exposure. So we shall see. Just please be careful out there. Double mask everything. They call me astronaut at the seat to table place because I wear so much to just eye protection. Okay, let's go to this chart here that I brought up right here. Okay, let's see where we are here. Okay. Surprise, surprise, surprise. Okay, we had a diversion again. This is another example. We had a diversion here again. Let's go up one more. On this indicator, right? There we go. We're rising, begin to it. And what happens? Nothing. We give back a little bit, come back out. This indicator historically is not very good to give very, very, very long-term signals. But now we've gone to a level we haven't seen before in ages. 94.39. Obviously, yesterday was even, the day before yesterday was even higher. Very, 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 very high readings. Somewhere in here, we're going to break down. You're going to ask me why. My answer is, I don't know. Why? Oh, how come? Indicators don't give you what the news is. They work until they don't. That's another caveat. But also, I always try to concentrate on what has worked for me is what's the catalyst. I know we're in trouble if we've gone too far in one way or the other. But the question to me is, what's the catalyst, and that's what we have to watch for. Okay, let's go to a couple of overnight stuff. Here's the, I don't know, TF stuff. Hold up. There we go. Here's what we've done overnight. 30 minutes. As you know, I got a little extra monitors here, so I run on different formats just to see what's going on. 30 minutes, something a lot of money managers look at. But here's a chart you're in. So we're drifting very slow, not a lot of range, 0.4. Yeah, we've had a couple of big moves. There got to be some consolidation. That's natural. Nothing to read into that. Yeah, nothing to read into that. That's just natural market. We have to get in there and do this for you guys. We haven't. Oops. Come on. Huh? Oh, no. Okay, there we go. Sorry. The Excel stuff, I don't think we posted this week's shit. I'll try to catch up today. Or maybe we did Mondays, I forget. I know we were good as of Friday. Over the weekend, I did get caught up. And you could see where we are. We're above. The CI is over the 27 area, and as at a cross. You could see that in the negative down there. Okay, so I would be careful on the upside right now. It shows we should be pulling back, and I think it also reflected in the price of oil. I know at 65, what was the high we had there? I forget what we had. Was it 65? Was it 62 and change? I forget. A lot of local fellows local traders I know, they were, yeah, there we go. I didn't know it was 62 then. Okay. They were all excited because we passed 60. And now we're pulling back and consolidating near it. So look at that. Yeah. I think you're going to see a relationship now, more natural between CL and the let's say 10-year, because I'll talk about where the economy is heading, and maybe we're going to do a retest of this before we go back up on 58s. Okay. Always look for extremes. Look what the market does at extremes. In between is noise level. You notice the same thing I do on OTF on doing trading. There are times I look for a price, I draw it, I show it to you, tell you in real time, and then I just sit back. You know, I've got a couple of trades on. I'm waiting for it to see where it goes, where it does it. Now, once it gets there, that's the time I have to make a decision. That's the decision point. In between, there's a lot of noise going back and forth, a lot of buy and sells. So there's order flow. But once you get that level, we're not the only one watching those levels. It's going to get some attention. We have to take action. Okay. My favorite still continues these dots. Now, yesterday, getting back on the horse. Yesterday, I was on simulator. Let's see how I'm going to start on simulator again, but let's see how I'll switch over, if I switch over to live or not. A couple of my investors are anxious for me to get back on the horse. I've told them, listen, we will do that, but let me be ready. I don't want to. It's easy to lose money. That's very easy. Let me get back on the horse properly. Frankly, I forgot some of the stuff I was doing. My bad. So that's where we are. Try to do better. Bear with me, and we've always met our challenges. Last 20 years or so, this is no different. Okay. Thank you again for your time. We'll do this again on Friday. Okay. Thanks. Closing the recording now.